Welcome to another Coffee with Samso. We're back here at the University Club here in Crawley on the campus of the University of Western Australia. We've got OD6 Metals Limited with us today. The code is OD6. Brett Hazelden is the Managing Director. Currently the market cap is about 17 million. Share price about 16.5 cents. So OD6 is all about rare earths in the Esperance region. For those who've been watching before, you would have seen Brett here many times. So Brett, let's do a 2023 recap on what have you guys been doing the last 18 months or so?
Yep, thanks for having us back, Noel. So we listed 18 months ago. We've done a fair bit in the last 18 months, so we've virtually done what we said we would do during the IPO process. We've got Australia's largest resource out there at the moment in terms of grade and also volume for a clay-hosted rare earth. So obviously Lynas is the best hard rock and also probably the best almost around the world. But
Yes, because they're the only one that's producing.
the only one that's producing, and their grades are just a unicorn as well, so they're a fantastic resource and out there. But for us, 344 million tonnes at 1,304 parts per million trio is a really good result for us the first 18 months, and that's looking to expand probably early next year based on the drilling results that we've recently announced as well. We've been having some success with CSIRO as well in terms of how to target these resources, so we're getting smarter about how we're actually going. So our drilling targets now are becoming sort of 90% successful on each hole now, and we're hitting good grades and hitting those clay basins instead of the granite outcrops and everything else. So we're definitely getting a lot smarter with that. CSIRO's recently done some updated work on that for us as well. What it's now enables us to do, because we've been able to calibrate it against our drilling, is look at what thicknesses we're actually anticipating now in terms of clay thicknesses. But we're also able to see what the thickness of the cover is as well. So from that point of view, that looks at stripping ratio and costs, and it also says if you've got a really high stripping ratio, why go target there as a drill to start with. So that's making us smarter about how we're going about those things as well. In terms of the metallurgy side of things, the metallurgy is actually coming out really quite well from us. So we're working with ANSTO on that. We've continued to put out numbers both around recoveries, which are averaging about 60%. Anywhere from 40 to 80, 90% recoveries. I think one of my first episodes with you, Noel, I sort of said somewhere between 50 and 70% is going to be really good recoveries for the rare earth sector in these. So we're ticking those boxes from that point of view. We've also put out some acid consumption numbers as well, which are low. So they're about 16 kilograms per tonne of ore, of hydrochloric acid per tonne of ore or clay. So that's really good, that's prospective, very similar to what we put out also in the IPO documentation as well. So we've managed to hit all those boxes going forward. So we're now working through the next steps and figuring out where to go next.
On the chemistry side, can you just elaborate a bit more in terms of the acid use, and because that's where we kind of at this point in time in the rare earth story, right?
Yep.
The understanding of how that balances, I think it's very important. To a later question, people will understand why we need to get a firm grip on this. Hydrochloric, sulfuric, can you just give us a 101 on that?
Yep.
Or a reminder anyway.
A reminder of how it all works, and we'll do a bit of comparison as well. So normally, if you're a pure ionic, and look, everyone has a portion of ionic rare earths in there, plus some acid recoverable, plus what I'll call refractory, so just not recoverable during a normal process, a bit like a gold ore effectively. You'll have guys with ounce dirt with gold ore, and then it will be refractory, and you've got to put it in a roaster like the hard rock guys do for rare earths. So we're not that, we're looking at both the ionic proportion and also the acid soluble portion. So what does that all mean? There's been a lot of complexity around there. There's been some guys come in there and confuse the market. They've come and gone in and out of the market. They're now in lithium or doing something else. But the guys that are around were focused on rare earths like ourselves, we've been trying to work diligently about getting it right. So there's a couple of different ways. If you're ionic and you're getting somewhere, most ionic projects are only getting 20 to 30% recoveries going forward. Meteoric seems to be a different one. They're getting higher recoveries. When you look on the averages, they're probably sitting around 50, 60%, which is a good outcome. And what does it mean being ionic? It means you can use ammonium sulfate with sulfuric acid at a pH of about 3 or 4. So you still need to add an acid, and also that ammonium sulfate, which is a fertiliser, to be able to recover that portion of it. Now, we can do that. We've got about 20% recoveries also around that. But if we take our pH down a little bit lower to a pH of 1 or a bit less, we can then increase our recoveries up to 60% plus. So that's why we're doing it. When you use hydrochloric acid or sulfuric acid, and we're seeing similar results for both, hydrochloric acid's generally better. What happens is you take a little bit more impurities into solution with a higher concentrated acid. So what does that mean? It means when you've done your solid liquid separation, so you've leached the good stuff out of the ore and you've got it all into the solution, whether it's ionic or acid soluble, now we've got to deal with that solution and remove iron, aluminium, there'll be a little bit of thorium and a little bit of uranium and a couple of other things to deal with. So that's the next step in the whole process, and that's where most people are at the moment. So from an acid leaching point of view, it's fairly straightforward. So we can leach it with hydrochloric acid. The differences again between a couple of the processes is if it's ammonium sulfate and it's reacting really quickly, you'll leach that in about 2 hours. So with the acid process that we're looking at, it's somewhere between 6 and 24 hours, depending on time frames that you're looking for recoveries. So what does that look like again? It means if you imagine your gold circuits again, you've got more tanks. And you're just circulating those tanks and they're going downstream like happens in gold. So that's the process. It's relatively straightforward for both of us in terms of ionic or non-ionic guys looking at it. Very similar, dig it up out of the ground, stick it into these tanks to leach it, and then the next step is you separate the solids and liquids and remove the impurities.
I mean, obviously the chemistry side, the production is the important part. I mean, what's the thoughts on how did you go about lowering your cost of, your production? What kind of facilities would help or be better? I mean, I don't even know the words to describe, but lowering your cost of production, right? What else could you do?
So consumption is obviously the key. So how much you're going to use. So if there's lots of, say, calcium in the ore, that's going to consume lots of acids. So you don't want those type of things in there. So you're looking for specific areas of the ore body where you don't have those areas. Equally, if you're looking at trucking in reagents from anywhere, so if it's Australia, Brazil, South America, Africa, wherever, if you don't have a readily available supply of chemistry or chemical suppliers in that area, you've got to truck it in, or your other option is to create it on site. So generally, if you're trucking in these things, say your acids, you're trucking in 60% water plus. So trucking water is expensive. So you'd rather truck in a reagent that is in a solid and then create what you need to do on site. That's cheaper. So hence we're looking at what's called a chloroalkali process. What that is effectively we take sodium chloride, so your table salt, and then we add water to it with energy, and then into an electrolyzer. It then produces hydrogen, and it produces hydrochloric acid, and it produces sodium hydroxide. So an acid and a base. So a lot cheaper to do that on site. Yes, you've got a capital cost component to build it, but quite cheap to actually run once you're up and running, especially if you're using renewable energy. If you were using sulfuric acid, for example, you can truck in again sulfuric acid already with that water content in there, but you can also truck in sulfur and burn it to create sulfuric acid. So Ravensthorpe Nickel, for example, does that down Esperance Way as well. So there's various ways to obviously lower your costs. Some of that will involve a little bit more high capital cost. So we'll all have to put in some capital cost from a reagent point of view in terms of production. Otherwise, you're going to be absorbing sort of 2 or 3 times the costs in terms of having to truck water there and paying someone else the margin to actually create it. So it's a big driver along with how much you're going to use per tonne of ore.
And how does ESG pay? Because ESG is getting into I remember the first time we talked ESG, I said, I kind of said, well, the costs, how much more costs involved, and there's arguments, not much to a lot. So in your case, you see that because everyone's talking ESG, even magnitudes more than when it first came out.
So ESG is an interesting one. I mean, China's obviously producing the way they produce. It's probably not very ESG friendly. is the world prepared to pay a premium for ESG is probably the question to ask as well. Generally, you don't get it, but I think from our point of view, we can't do it the way the China does it or Myanmar does it. So we will have to look at how we work with the community, both traditional owners, the Esperance local community, but also in terms of what environmental impacts are we going to leave behind at the end of the day. And finally, what's your carbon footprint? So Esperance itself has two existing turbines down there, 4.5 meg, recently installed. So big wind turbines, and they've got a 4 meg solar farm down there. So we know that works. We know they're getting up to 70% penetration of solar into that. So for us, that is a good sign. And we'll, from an ESG point of view, we'll be looking at going down, obviously, wind turbines and solar. I think what's also coming out of it from both Europe and the US is a requirement to tick those ESG box. Will we get a premium for it? I don't know. I think it's going to become standard. But I think we're going to have to go down that path regardless to meet those offtake potential providers going forward.
I mean, in everything that we discussed, we talked about, grade, recovery, processing cost. But what is there a question where what is the real driving economics behind this? It's hard for people to try and grade, good grade, low grade, but what is the real economics?
Yeah, it's been an interesting one to try and get people to understand it. So, and even ourselves. So when we're looking at putting a resource out there originally, we're going, the industry standard in Australia was using a 300 parts per million cut-off grade. And I sort of was a bit uncomfortable at that because when I looked at the mining cost and the processing cost and all those, I did the numbers and I just thought that seems a little bit too low. So we ended up coming up with what's 1,000 parts per million cut-off grade. So there's only two of us doing that. That's ourselves and Meteoric that are doing those. And the reason behind that is you look at what volumes you'll have to treat, what your recoveries are, etc. You look at your revenue base and go, right, am I making enough money to obviously pay back the capital and actually pay the operating costs? So most of the analysts have come up with this 5 million tonne per annum magical number. Some of that was started by IXR in Africa. But if you look through that and then you add the grades, and we put a slide in some of our recent presentations on sort of why we put around that 1,000 part per million. So we looked at grades anywhere between 800 parts per million all the way up to 2,000 parts per million. If you look at just a fixed recovery of 60%, which is what we're sort of looking at the moment on average, some of the other projects are as low as 20% and some might be higher as well. So you can easily adjust those numbers. But there's also a payability that people need to get their head around. So good old rare earths makes life complex to some extent. So what's a payability? So a payability is it's like you're getting how pure your product is, you get more money for it. So, and that's based on your rare earth oxide price. So think of if you're going to produce NdPr as an oxide, you'll get 100% payability. But if you're going to produce the first step in the ladder, which is just a dirty concentrate, a lot of hard rock guys looking at doing and shipping somewhere else, you'll get 30%, 40% payability. If you then come up the rung and you get into a carbonate, which is what we're looking to produce, you'll get somewhere between 60 and 80% recovery payabilities. And if you produce a pure oxide, you'll get 100% of that. So if we work on a 70% payability by producing a carbonate, your revenue at 5 million tonnes per annum and variable grades goes anywhere between 100 odd million at 800 ppm trio, all the way up to 300 odd million at 2,000 parts per million. So you can see that by having a high grade, you have to potentially double, triple the revenue from that point of view as well. But if you increase your recovery and you chase recovery by using more acid and those type of things, you're also increasing your revenue, which then pays for, well, obviously a lot of acid costs. And I sort of look at it and go, the numbers that we've been looking at, you'll be using about $30-40 million worth of acid a year. So to chase a higher recovery at better grades, you can obviously afford it. So what does a mine look like based on that? Most people look at 5 million tonnes per annum. You need to have a 20-year mine life at least nowadays to get through the economic models, if not longer. So there's 100 odd million tonnes there to start with that you need as a base. You need recoveries around 50% and above. The grade is really showing up that you really want 1,000 parts per million above, and if anything, the first few years need to be somewhere in between 1,500 and 2,000 parts per million. to be able to pay back your capital and everything else. So that was the driver for us. It's a key slide. People need to look at that and get their head around. There's some opportunities in that as well. If we can look at a carbonate going to an oxide, suddenly we've moved to 100% payability. There was some work done by ANSTO that was shown at ANU conference recently, and that looks like potentially a viable path that we should be looking at as well. So suddenly there's an extra 30% revenue that you can pay for going down to an oxide route.
You and I were at the ANU Rio conference, and you had a one slide which I think is kind of pairs off the difference between what Australian Rios as opposed to the South American stuff, which equates effectively this ionic versus non-ionic debate, right? Yeah, I think that if you can go through that, because that really is the crux of people's understanding, because at the end of the day, it's the bottom line that you need to look at. But yeah, if you could go through that, it would be good.
Yep, so on an ionic basis, they'll be using ammonium sulfate, which is about $350 a tonne, and these are all prices that we've spoken to suppliers with. There's obviously a transport component that you need to add or consider that goes up and down. So, so from an ionic point of view, you use ammonium sulfate, then you'll add sulfuric acid as well, which is about $400 a tonne to have on site. That will then leach the process, and then at the end of the day you need to neutralise it. So if this is farmland or even just vacant crown land with nice trees and everything else, you still need to put that back into a neutral pH so things can grow again, and you can do that. So you need to neutralise it. The ammonium, the next step is once you've actually leached it, you'll use ammonium bicarbonate to help neutralise it, and then produce a final product, and also remove your impurities. So if you look at that, there's some costs there. It really comes down to what's your consumption numbers. People aren't putting the consumption numbers out there. For us, we've put out our consumption numbers for acid. The good thing about having a chloroalkali facility is that we can also then produce the sodium hydroxide, or the base, for free. That then neutralises everything and helps the precipitate out the final product at the end of the day. So our numbers look about $500 a tonne of hydrochloric acid. And if you look at it on a comparative basis, there's not going to be a huge difference in reagent costs. So if you go through the process steps, there's going to be mining cost. Everyone's mining cost is going to be similar. It's going to be somewhere around $2 a tonne to mine a bit of waste ore. So depending on your stripping ratio, that number will go up and down. If you look at, you'll have your general and overhead cost, which are probably $1 a tonne. Your processing power and all those costs will be probably in the order of $5 a tonne, and your reagent costs are going to be also in the order of around $5 a tonne. Everyone's going to be in that range. That's what the analysts are putting out. It works out to be somewhere between $15 and $20 a tonne of ore produced. So where does the economics come in? It comes in as your grade. So if you've got a higher grade, more tonnes processed, or same tonnes processed, you'll get a lower cost production per rare earth oxide produced. So that's where it comes in. We don't see a huge difference between, say, the Brazilian processes and ours. In terms of the grade of the resources, there's a slide there that we've put out that compares what the grades are and resource sizes of a lot of the projects. We've also put in our tonnage grade curve based on different cut-off grades, and everyone's sitting roughly within that area. The only one that's different is meteoric. And look, we've got to also remember that we're going to need another dozen mines. So this isn't a who's the best and all these type of things. We actually need meteoric, we need ourselves, we need 3 or 4 other guys, plus a couple of hard rock guys to get up and running as well to actually meet this forecast demand. So the debate really, to my opinion, is a little bit agnostic, because we're going to need someone that's got an acid production base or a ionic production base.
I mean, I was going to ask you these questions. What's your takeaway from the conference? But following what you just said, I think that the takeaway for me was that you're right. It does, the demand, the forecast demand for it, it really doesn't matter at the end of the day whether you're meteoric or the OD6 of this world, because the predicted demand is so big that there's room for everybody, and who you sell it to. It almost comes to I mean, the number that was quoted was like 35 times more or something like that. mean, that's huge. I mean,
Yeah.
you
Where's it
know,
all going to come from? It's like copper and nickel and all those.
yeah.
I think they had 4 different presenters with all their different theories on what the demand driver was, but I think the lowest was 10 times increase, and then 35 times was the upper
Yeah.
end. So it's a lot of rare
10
earths.
times a lot. They think about it,
Yeah,
right?
that's right. How many
Um,
more mines is that by itself?
yeah, and things don't develop overnight. It takes time.
The other interesting one that I took away from it was the rare earths are going, it's helping decarbonisation. So it's not just about the rare earth going into Teslas or wind turbines. They make the motors more efficient, so they're more efficient on energy. But I think they had numbers of, again, between $4 and $10 trillion worth of goods that it goes into. And that could be into a washing machine, the motor that's going there. So if you've got a 5 or 10 star washing machine, the part of the difference is probably that it's got a rare earth magnet motor in there that's making it more efficient, using that energy more efficient. So that's going to be a key driver going forward, and how you decarbonise the world.
Yeah, I think that's, when we had the rush, the equity markets rush, no one had the time to really realistically sit and understand the concept.
Yeah.
It was just about the rising tide of the share price.
Yeah.
But now that everything, there's a bit of a hiatus of a thing, and people should look at this because this is a repositioning of what will come in the next 10 years, 20 years, the next generation.
Yeah. I think there was a good quote by China. It was probably about 10 or 20 years ago, probably even longer. They were saying everyone else has got oil, but we've got rare earths.
Yeah.
And I think they said it at the conference, and it sort of says that they focused on this a long, long time ago. They've developed that whole value chain, and now they're seeing the rewards from that. And you're seeing there's going to be lots of Chinese EVs in Australia going forward, just because they've tied up that market and they've gone away from that combustion engine side of things. So a lot smarter, a lot more longer term thinking, and that's why the Western governments now are trying to westernise that whole process so they can compete.
And that's the other takeaway, is that I was quite surprised at how advanced the reallocation of the Western supply chain is, because there's maybe like 10 parts through the downstream process. Probably a good 5 or 6 were pretty much there, if not already there. And there was another several trillion waiting to be spent.
Yeah.
So that demand and that balancing of markets, I think it's a given. But the demand is just, I mean, if you take the demand, who cares where it goes? Because everybody needs it.
Yeah, that's right. And the question is how do you, or who do you sell it to, but what's the time frame, and how's it all going to be developed, and where along that process do you take your product to as well? So the general process steps are, you can either produce a concentrate, you can produce a carbonate, you can then produce a rare earth oxide. So this is going prudential steps. You'll then produce that rare earth oxide, will go into the metallisation process. That will then go into magnets, which is the next step, the 5th step, and then it will go into final products like cars or wind turbines or anything. So there's 6 steps there. The reality is the US and even Europe, with the way they're positioning themselves and putting lots of money at this going forward, is they're wanting that downstream manufacturing in the US or Europe. A bit like China's got the control of it, 90% of the control at the moment. They want to see metallisation, magnets, and everything going into EVs in America. So where does that leave us in Australia and anyone else that's looking to start up a mine? Well, you can produce a concentrate, but that's still not selling it to the end user. There's still a couple of steps there. So for us, we can produce the carbonate, but you still got the oxide step to go to. If we looked at going both either to a carbonate or oxide, if we get the oxide step, we can sell directly to the metallisation guys in America or Europe going forward. And that was probably a big eye-opener to me, the whole heap of new names of all these new people looking to build these facilities in America, really. So you've got Iluka that's looking at doing it in Australia, but you've also got Lynas looking at doing it in Texas. They've stated that facility for an oxide plant. And there was 3 or 4 other new names that I'd never heard of before that are now looking at metallisation. So what does it tell me is it says we need to keep our minds open. We've been looking at a rare earth carbonate as the interim product to produce because it lowers your capital costs. But the oxide process might skip a step and get rid of that downstream missing person that we don't have at the moment. So equally, we could sell it to Iluka, we could sell it to Lynas, we could sell it to Mountain Pass in America. You can sell it to Estonia, whose name escapes me at the moment. So there's those guys there, but there's a whole heap of new guys coming up.
Yeah, I mean, look, at the end of the day, for those critics who say, oh, the rare earth industry is not going to happen, whatever, well, that's clearly wrong. Where we sell at the end of the day, I think the answer is that the demands will speak for itself. And I always draw people back to this thing is that, you know, iron ore industry wasn't an iron ore industry for a long time. It's just, it wasn't there all the time, right? So the Pilbara wasn't rich all the time. It was only rich in the last 20, 30 years or so.
And that was a massive spend in terms of infrastructure
Massive
as well.
spend infrastructure, and the government had to come in to do that. And so, and it's a bulk commodity, you guys are a bulk commodity, and at the end of the day, you know, it's a game for those who have the opportunity to lose it. Those who don't have it, then they're not in the game.
Yeah.
So, but look, what's on the cards for 2024 for you guys?
Yeah, so we've finished our phase 3 drilling. So the original resource was based on phase 1 and phase 2. So the phase 3 drilling's results are out there. We're busily putting it through the models at the moment. So we'd expect to see a big resource increase in Q1 next year in 2024. There's an area there that we call inside centre that looks really, really good from consistency, thickness, grade, all those things. We've had a couple of metallurgy results that were in there as well that look favourable as well. So I wouldn't be surprised if there's 100+ million tonnes in that zone by itself. And as we sort of said on the revenue chart before, if you've got 100 million tonnes and suddenly you've got at a good grade, suddenly the numbers are starting to stack in your favour. So we'll see a resource upgrade. We've got more metallurgical work that we're testing or doing at the moment. So there's a whole heap of, we've created what we call a bottle roll test with ANSTO. It's taken us a while to get that optimised and working properly. But we've got over 100 odd samples in with ANSTO at the moment. We're hoping to get results out before Christmas, but we're still waiting on final assays and a few QA/QC checks to go through. So that'll come out probably January at this stage, maybe February, depending on people's leave and everyone else. The whole world disappears for the next 4 weeks. So that will, again, help us zoom in on the best areas from a metallurgical recovery point of view. We'll also be working with ANSTO on a couple of different fronts. So we know we can leach it. Now it's the next step of looking at how do you extract and remove impurities. So there's a few interesting technologies that are coming up at the moment. So there's resin in pulp, so it's a bit like carbon in pulp from a gold point of view, or you can put resin in the solution as well. What does it do? It effectively attracts all the rare earths that are in solution onto this particle or a resin particle, and then it allows you to concentrate it all up into one little spot. So if you can do that within the actual leaching tanks with the ore, then it'll simplify your separation of solid and liquid. Equally, if you use it in the liquid side of things, you'll be dealing with lots of volumes of water, quite a big volume of water. What you can do is actually concentrate it onto those resins, and then you can deal with a really concentrated material downstream. And these resins are also becoming relatively selective for aluminium or iron or rare earths as well. So at different pHs, at different resin types, there's some smarts around there that we think we can really optimise that impurity removal process. There's also ion exchange processes in there as well, and there's also nanofiltration that helps recirculate acids and other reagents as well. So there's a whole heap of smarts that we're working with ANSTO on that will go through most of next year. So that'll be a good set of results for us, but it'll also lead into a scoping study as well for us. So we'll be able to take all that information, keep all the options open, because you don't want to narrow down on a scoping study point of view and say we could use a resin, we could not use a resin, we could just use a standard precipitation process. We could produce a carbonate, or we could go to the next step and produce an oxide. There was an interesting presentation by ANSTO at the ANU conference that spoke about they've looked at the circuit to change it from a carbonate to a solvent extraction circuit. So you take the carbonate and you produce rare earth oxides, individual ones. And what they've done is they've figured out that what you can produce is a whole heap of different oxides by themselves, so 15 different oxides. Or you can look at, again, 90% of our value is coming from four main products, the rare earth products, dysprosium, NdPr, dysprosium and terbium. So those four products, they've been able to look at that process in terms of solvent extraction to focus on getting those four out and then have the residual 10 elements as a concentrate they can on-sell to someone else to separate. Now that gets you the value, but it also then gets your payability up, not quite 100%, but it would be 95% based on value. So we'll have a look at that. We'll work with them on that process as well. It's interesting that what it might mean is if we don't have to produce a carbonate, we can actually potentially get rid of that step and take the streams that are coming out of the leaching facilities and actually go directly to an oxide. So that's quite exciting for me with the metallurgy background. There's a lot of water to go under the bridge to make sure that can work, but equally we'll still look at the standard path of producing.
How realistic is that, in your opinion?
Look, it's got to happen at some stage anyway. So it's realistic that it's going to happen regardless.
Yep.
The question is do we do it or does someone else do it?
Yep.
The payability is attractive in terms of that. Capital cost will be slightly higher. So can you raise the capital is the key question. But it does remove a step on who you sell it to. So instead of only being able to sell a carbonate to China, or maybe some of the existing players, suddenly producing an oxide that you can sell straight to these metallisation guys. So that becomes attractive. That takes a step out of the process. And if you've got the ESG ticks in the boxes, then suddenly your Teslas and anyone that needs to tick the boxes to get the subsidies that the government's providing through that, the IRA, but there's also the BIL thing in America. Through the BIL process, you're going to need to have someone like us potentially ticking those boxes for them.
We've basically gone through what you guys can do to get your product to market, but can you give us a rundown on where you think this rare earth market is, where, you know, whether on the pricing, and we've talked about the demand, I mean, but where do you think this pricing, because it's come down to about $60, $70, but where do you see it going forward?
Yeah, it's an interesting one. So prices 12 months ago were $120 a kilo for NdPr oxide. It's now dropped to as low as 50 at one stage. It's come back up to about 60 to 65. So from that point of view, everyone's share price has been depressed, including Lynas. The market's gone, oh, what's going on? But all the forecasters are saying the price needs to go back up to $100 or $200 a tonne just based on pure demand. But it's also what's the incentive pricing. So you can see people like Arafura or Hastings that are probably fairly well advanced. They've got offtake agreements that they're trying to finalise. They're going to struggle at $60 a tonne. So the incentive price for these guys to get into operation really needs to be $100 a tonne, $100 a kilo, sorry, of NdPr oxide. So I think China's probably playing some games at the moment. There's been a lot more product coming out of Myanmar at the moment, which is really China pulling it out, but they've also been destroying the landscape in Myanmar as well by doing it the way they do it. So I think there's obviously the junta trying to get as much money in as they can, but at some stage that
Before
will stop.
they get kicked out.
At some stage they will have used as much as they can, and that will disappear. So I actually see probably on the horizon there's probably a supply shock coming from less material coming out of Myanmar that will push the prices going up. And I wouldn't be surprised if we see China do some export restrictions at some stage. They've done it before to Japan. That's why Japan financed Lynas to get that going. So I wouldn't be surprised in the next 12 months if we see something similar like that. Prices will jump. You can already see Lynas stockpiling some of their products because they're probably viewing that prices are going to be a lot higher going forward. So I think prices will be higher. The forecast of $100 to $200 a kilo NdPr might not happen in the next 6 months, but it will probably happen over the next 1 to 5 years. And if the demand forecast of this 10 to 30 times more is true, then it can only go up because the mines aren't there to produce it.
Just to remind everyone, lithium went from very good to almost dead, and then sprung back up to life, and we know it as it is today. And it's come back a bit, but so that's just the nature of the market, right?
That's right. And look, I think the market will sort itself out. And these mines don't come in overnight, do they?
Correct.
It takes
Yeah.
5 to 10 years to get a mine through environmental permitting, discovery, and drilling, and all these studies and financing as well. So it's not a quick process.
Mm. So, in terms of news flow for you guys, we've covered a heap. Give us the short version.
Yep, resource upgrade, quicker one next year. A lot more metallurgy results across multiple different areas from that side of things. We've got a big drill program planned for next year that will infill drill certain areas, so there'll be results from that. But we're also continuing to test all these areas that CSIRO's helped us identify regionally as well. So we will focus on where we think the good area is at the moment, but there might still be a better area out there that might be the area that we can start off with. But all the stuff we're doing now, we'll actually move towards that going forward, and a scoping study later next year. So another big year for us. Looking forward to coming back and talking about the results.
All right. So 23 is almost over. Any last selling your soul to the guys out there? Anything we've missed this?
No, look, I
morning?
think the rare earth industry is a complex industry. It's hard to get your head around. There's been lots of confusion. We try and put as much information out there to try and give investors a better process to actually look and understand what the process is. So look at what we're putting out there. Look at that technical presentation we did at ANU. There's lots of weird and wonderful things in there that we don't normally put out in the normal sales pitch side of things. But I think it's really important for investors to look at it, understand it, and not just go on someone's pitch effectively saying they're the best and only focus on them. We need lots more mines. The industry is going to be needed because that's the way the world's going. COP28, I think it was, has just finished. Lots more rare earths and decarbonisation on our way.
I couldn't agree more. I went to the conference with doubts, walked away with like blue sky.
Yep.
Can't believe that the sector is what it is or what it could be.
Yeah. And you look from our point of view, we see ourselves as one of the better ones in Australia from a rare earth, a clay-hosted rare earth point of view. And if we can't make it work, then it's going to be a struggle for a lot of other people to make it work, which then means it's going to be a struggle for the demand to be met or the supply to meet the demand. So there's got to be some reflection on that on price going forward. Our share price compared to some of the other guys, say in Brazil, we're a tenth of what they are. We've probably got a lot more upside in terms of going up to whatever the number is, $100+ million versus someone at $400 million. Where would you put your money? I would put it in someone like us that's got a lot more potential.
Yeah, and I think I should add to that is from that conference, one of the things in the early part, I remember they started talking about what Australia had that could make the rare earth industry better and etc. And I couldn't see where the angle was, but towards the I think after about 3 or 4 guys talking about this, it clicked. You know, we are a place where first tier 1 jurisdiction, our ESG will be, you know, we'll get the 3 ticks, etc. It's and going down the road, that greenness of the product, I think is going to be the telling sign of where people will go. And we're seeing that shift already. You know, the whole greenness, green this, green that, and there are funds. I mean, I just came back from Singapore talking to these guys. There are funds waiting, and their mandate is to only go into this kind of stuff. Yeah. So I think that's that hidden thing where people don't realise yet that, you know, we look at the Aussie stuff and we go, oh yeah, it's not as good as that, and it's cheaper there and everything else. But those may be the old days, but now it's about how green you are and how responsible you are.
Everyone's trying to catch up at the moment, so westernising the whole process. And you've got to remember as well, there's, say, Brazil and even most of South America, they're actually not a westernised country from that point of view. They're actually part of the BRICS, so Russia, Iran, all those guys, China. So if you're going into westernisation of that whole process, well, you want to be in Australia. The tenure is known in Australia. The process to mine is known in Western Australia really well. So we will just go through that process. We've got environmental surveys that we've done and all those recently. And that's what you need to do to tick the boxes.
Well, Brett, have a good holiday break. And thank you again. You know, the rare earth is so complex. It really needs people like you guys to come on and talk about it and go through the fine details, right, rather than a sales pitch. But again, thank you. Again, we have our coffee from Kick, and to 2024.
Yep. Hope everyone has a good and safe Christmas and New Year.
All right.